On March 18th, 2025, I recommended to investors that Snowflake was a great investment to accumulate. I liked the company's long term prospects and the valuation had become attractive. At that point in time, Snowflake stock was trading at around $150 a share. Thankfully, since I made that video, the stock price has soared. It's now over $210 a share. So, what do I think about Snowflake stock right now? Do I still think it's an excellent opportunity to accumulate shares? Or is it too late to buy this stock and it's better to just hold on to whatever you already accumulated and instead spend your money on accumulating other stocks, right? So, I'll answer that question in this video by revisiting Snowflake stock, looking at the company's revenue, its cash flow to operations to sales, look at its new higher valuation and see if it justifies the higher price and if it's still a good time to buy Snowflake stock. So as I mentioned, I recommended Snowflake stock as a buy on March 18th, 2025, and since then the stock price has soared. Of course, one of the reasons why I've liked Snowflake stock is because of the business. It scores as one of the highest customer value proposition businesses out there when measured by several data points, including the revenue retention and customer survey scores, which the company scores among the top of all of the companies that I'm following. Revenue growth also has been excellent, although slowing down. $3.8 billion in revenue in the most recent trailing 12-month period. That's up from around 100 million in 2018. But you can see most of that growth happened before 2024. So you could see from 100 million to 2.8 billion happened quite quickly. Revenue tripled from 2018 to 2019 and then doubled from 2019 to 2020 and then doubled again from 2020 to 2021 and then nearly doubled from 2021 to 2022 from 1.2 billion to 2.1 billion and then only increased by roughly 33% from 2022 to 2023. And then from 2023 to 2024, the growth was even slower than that. And from 24 to 25, even slower. So you would expect this from a company that's growing to become a larger size. The rate of increase to decelerate, that's normal. That's to be expected. And it's nothing new for companies like this. However, you would prefer that it continues growing at a fast rate. And if it was growing at a accelerating rate, you would be willing to pay a higher valuation for a business like this. In fact, the business in the AI category that is accelerating revenue growth is Palantir. Even though it's growing to a larger scale, it's found avenues to accelerate revenue growth, and investors are rewarding the company with a more premium valuation because it's accelerating revenue growth. So the second derivative is increasing, whereas for Snowflake, the second derivative, which is the rate of increase, is decreasing. So when measuring Snowflake on its operating cash flow to sales ratio, we also see that it peaked around 2023 when its operating cash flow to sales accelerated all the way up to 30% from negative 150%. And now it's down to 21.7% after reaching the high of 30.2%. A cash flow to sales ratio of 22% is solid. It's nothing to complain about, but it's also a little bit alarming that the ratio is falling as well as the revenue growth rate is decelerating. So you've got some metrics that are not bad, but they're not excellent, right? And Snowflake for a long time, for several years, it was excellent on these metrics. Revenue growth was accelerating, growing very quickly, and that was helping facilitate improvements in its cash flow to sales, improvements in its operating margins. And now that revenue growth is decelerating, it's also decelerating at a time when the company is making greater investments in its AI capabilities. And so its margins are contracting and a little bit concerning, right? And this wouldn't be concerning if you're dealing with a cheap stock. If you're dealing with a cheap stock, then you're not being picky, right? I'm speaking about myself here, actually. When I'm looking at a stock that I see with a cheap valuation, I'm not picky. I'm not looking at everything to be perfect. But when I'm looking at a stock that's trading at a premium valuation, then I get more selective. I get more picky. I want things to be all on point if I'm going to pay a premium valuation. And Snowflake for the longest time was that kind of a business where everything was at top-notch levels. Everything was an A plus for the company. And now, more recently, it's not an A plus, right? It's not anywhere near a poor grade, but it's not an A plus anymore. If you've got decelerating revenue growth and you've got margins contracting, you're no longer an A plus in my ranking of these categories. So similarly, when I look at the return on investor capital, they were making excellent progress, but that progress has now turned around and it's worsening. So the ROIC, after improving from negative 36% all the way up to negative 21%, is now declining back again to negative 26%. So it's understandable for an early stage growth company to have these negative numbers, but I prefer it when it's accelerating like this, when its revenue growth is helping the company make progress towards profitability on the bottom line, which Snowflake was demonstrating for a very long period. By the way, I'm getting all of these charts and all of my data from finchat.io. I've partnered with them to provide a discount to all of my viewers that do their own due diligence, their own research. You can get 15% off any paid plan. You'll also get 2-week free trial. Give them a try. There's a link in the description. So valuation, when I recommended Snowflake as a buy around March, it was trading at a forward PE of slightly above 40. I should say a forward price to free cash flow, slightly above 40. And since the stock price has increased meaningfully since that recommendation, it's up about, uh, let's see, let's look at the price chart here. You can see it was trading at around $150 around March 18th, and it's now up over $210 as of this recording on June 6th, 2025. So the stock price has increased as well as the valuation. It's now trading at a forward free price to free cash flow of 56, which is near the highest it's been going, back to October of 2024. And then for moments in 2024 was trading at a lower valuation. And then before that, it was trading at higher valuations. But of course, 2 years ago, this business, I would have very happily paid this same forward price to free cash flow of 56 if buying this company in 2022, when the performance metrics were still improving, the revenue growth rate was still very strong, the cash flow from operations to sales was nearing peak levels, that was a more attractive business than when these important financial metrics are on the decline, right? So I'm willing to pay a lower valuation for a business that's in the current state that Snowflake is in compared to the state Snowflake was in 2023. And similarly, when I look at my discounted cash flow valuation model for Snowflake, the intrinsic value per share I calculated is $124. The current market price at $211 suggests that the stock is overvalued as well. So while I had the stock rated as a buy when it was at $150 a share, now with the price at over $210, the huge increase in share price since my last buy recommendation shows me, and I've come to the conclusion that the accumulation phase for this stock is temporarily paused. So if you were able to buy Snowflake stock in the 150s, 160s, 170s, congratulations. You got this business at a good, attractive price. And I would recommend holding on to that stock and waiting for the company to grow and expand and generate investor returns. But at these prices, I would not recommend buying Snowflake stock. I would, if you're interested in the company, it is a great company with great long-term prospects. I would recommend putting it on your watch list and hopefully getting it at a more attractive valuation in the future. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.